Welcome to a market update video. We are going to take a look at Bitcoin, and at the end I'll take a look at the S&P. So as always, let's go into screen share and look at my website, and then we go to the charts. I'm just showing you my website in order for you to read my the disclaimer. So there we go. You should now see my website, and that's the disclaimer in English. I just have to take care of Zoom so it's not in my way. So let's put it there. Zoom is always a little strange. I don't know how to not have it in my way. Anyways, here's the disclaimer. So you can take a look at that. It's in English. And for those of you who speak French, here's my disclaimer in French and my disclaimer in German. If you have any questions, you can take a look on my website and always ask me. You can reach out to me. My services are just here, so take a look at them. I just clicked on it, which you should see them. Did I click? I'm not sure what's going on, because normally you should see my services. Anyways, I do one-on-one coaching. Just click on services and then you see it. I have no idea why it's not showing up. Maybe I have to reload the page, but I don't want to do it right now. Something is wrong. No idea what's happening. So let's try to keep on going with the show. Anyways, my website, my link to my website is my description, and normally it works. So just click on it and look at my services. You can reach out to me if you have any questions. And now let's hope that this is still working. It looks like if it is. Yes, it is. Okay, great. So we can go on. Was a little scared of technical issues, but it all looks fine. So I'm not going to talk too much about TD sequential. Just so you know, here is support at 9,000, at 9K, there is support. And let's move on. If we look at the SMAs, they are all bullish in a total bullish structure. Here was a buy the deep scenario, a buy the deep scenario, and this candle is also a buy the deep scenario. Here you have two moving averages. They are still positive, and we have to go to get higher in order to not get them red again. But then again, if it goes red, it is only buy the deep scenario, just as here, because we are in a bull market and all those should be bought. So as long as we stay in a bull market, and for now we are, those are buy the deep scenarios. Here we have Ichimoku and Golden Cross, and we had here Death Cross, but I'm expecting that to change very soon if we go up from here. Here's also a moving average, and you have a Death Cross, but then again, I expect it to flip again. Also, those Death Crosses are buying opportunities in bear markets. I mean, in a bull market, they are buying opportunities, so you should not be too worried about it. Other than that, it's an occasion to go long. Here's a Death Cross, and for now, but we went higher, and the moving averages are going up, and we will get a Golden Cross if we keep on going high or stay at that level. Here we just have a Golden Cross, which is great. There are two moving averages, same system, but on those moving averages are not the same as the other ones. I don't care too much about what they are. just important to look at them and see if you have a golden cross or a death cross. And here you had the death cross, and now you have a golden cross, so it tells you to go long. Two more moving averages. Those, when it touches the red moving average, it is by the deep scenario, so you should go long. And as long as we're in a bull market, the green moving average is higher than the red moving average, and it normally stays that way in a bull market. We can look at last time, and I think it always, in the last bull market, I think it always or nearly always stayed bullish. But let's take a look. So I'm talking about that. Here it stays always bullish. It stays always bullish. It stays always bullish. Here you had an exception. And here again, you had an exception. So you can get an exception, but even when you get an exception, the moving averages are still working up. They are still pointing up. So they're not in a down slope. Here again, and they were still rising, at least the green one. So there were two exceptions, but normally you stay bullish. And that was the bottom of the last bear market. So normally you stay bullish. As soon as you go bullish, you stay bullish nearly all the time. Here was a little exception, and there was one more. But you mainly stay bullish, and even during the exception period, you are still rising. So for now, we are bullish since the moving averages did not cross. And to me, that is only a buy the deep scenario. Momentum is negative. Still negative, but I hope it will improve soon. Here we are below that moving average. It turned white, not red. It should turn red if you stay below it. I hope we'll soon get above it. This is Kopek curve, and when it turns red, like here, to me that's by the deep scenario. When you go below that moving average, it's also a by the deep scenario. So right now you're sitting on it. Here again, you have support at 8K, 8.8K. If we go that low, and if we did, it would be by the deep scenario. This to me is bullish because we are higher than the white moving average, which is important to me, and we are higher than it. So to me, that's bullish. Positive. MACD is still negative on the weekly. Stochastic is also negative, and here we are low on that stochastic band. So since we are below those that interval that I pointed out, it is a buy the deep scenario to me. Here again, when you touch the lower moving average, same thing as the last time, it's a buy the deep scenario. That point tells you the top, or it gets close to the top. This told you the bottom, and I'm expecting that moving average to turn. We have the weekly candlestick is a bullish harami, so that's bullish. Here we are far higher than the middle band, so that's bullish, and histogram is bullish too. I can give you the name of all the indicators, but it makes it long. And I'm not sure you're interested. If you want to know that, look at the past videos. Sometimes I say it for every indicator or most of them. And if you have questions, like how to look up the indicator or anything else, you always can reach out to me by clicking on my service and following the instructions. I try to make it as easy as possible in order for you to be able to reach out to me and ask me questions if you have some. So that's for me by the deep scenario, that indicator. Not sure what it is, RSI. So RSI at that level is for me by the deep scenario. It was also by the deep scenario 2 weeks ago. Here we had the correction that I was looking for. So that's over. We are positive if I look at the stop and reverse points. And here you have some support points according to William fractals. This is the percentage R is at the level where for me it is by the dip scenario in a bull market. Here yesterday we were touching that line, and that was also by the dip scenario. And here we're still a little high on the OBV RSI, but I mean, at least we touched that level. We're still a little higher on OBV. What I don't like here is, well, I don't mind too much, but we are still negative and we should go positive. So for now, we are still negative. As you can see, while we were, sorry, that's not what I wanted to do. While we were rising, you were positive all the time, and that was the top. And then you went negative, and we are still negative for now, but we are ticking up. So I hope that we will go positive soon on that indicator, which is actually, let's take a look. It's the NFI. So that's the next force, I think, which is negative. That indicate the last one is positive and the first one is positive too. Here we are negative on that indicator. Here we are positive on the first indicator, negative on the second indicator, negative on the third indicator, and positive on the last indicator. The third indicator is the most important to me, and it is negative. It is reaching the zone where normally it turns and goes positive. When it touched that zone, it is by the deep scenario, according to me, in a bull market. Here we have two depth crosses, and every depth cross in a bull, I'm not sure it's a depth cross, but you have that red cross, and that red cross, which I call a depth cross, is in bear market, I mean in a bull market, an indication to go long. So you had two following each other, and it's very rare to get two. Normally you only get one occasion to buy the dip. So this time we did get two occasions to buy the dip, which is quite rare. It happens sometimes, but it's quite rare. So I'm not expecting us to get one more depth cross. I'm expecting that the next cross will be positive, and that price should be rising from here. The first indicator, which is RSI, is at a level where it is by the dip scenario in a bull market. Here you have support at 9K. Here we went on the 6 hour, we went positive. We are still maybe negative on the last one, but if we keep rising, this should give us a golden cross soon. You maybe want to know what indicator it is. It is the CCI indicator. Whatever the, I don't have it in my head. I must look it up to tell you exactly what it is. But it is positive. I know how to read it, even if I don't remember the exact name, but I can look it up. Here we are positive, those moving averages with the EMS and the SMA, they are positive, and you have support at the green level. That's the first support level. And here you did get a go long signal too. So this is all positive and telling you that you are in a bull market. Here that was my time expectation, and I expected this correction to hold up to here where I marked it, and then go higher. We went higher on that candle, but we then went a little lower again. If we touch that level, it would be there would be support. That moving average, it would be support. If we look at OB, well, what I'm saying, if you look at ADX, ADX is positive, and that's all I want to say about that chart. So it's looking good. Here we have one ADX. So ADX here gives you a signal that you are in a buy the dip scenario. You were in a buy the dip over the last 2 weeks. Every time, if you look here, every time it gets red, it is a buy the dip scenario. Sometimes it's 2 to 4 weeks long, and now we already have 2 weeks. So I'm not sure that we will get a lot more. I'm expecting this correction to cease soon. We talk more about that when I'm going to take a look at Elliott waves. A lot more indicators. The first one is going down. I think that's distance for a moving average. And when you touch the yellow level that I marked, it's a buy the deep scenario. So you're still a little high, but we went down. Here we are already in the buy the deep scenario level. Here you did touch the blue line, which is a buy the deep scenario. And here you are touching the buy the deep scenario level too. So this tells you to go long. On that chart, we are having an indication here to go long by the deep scenario. Here we went positive, which is nice. The cycle is still pointing down, but I'm expecting that to change soon. It's a lagging indicator, so it takes some time before it gets positive. Here we are positive on both of them. I think that that's an Elliott wave indicator. Well, called Elliott wave. I don't know what it has to do with Elliott wave, but I think that's what it's called. Or maybe this one. Anyways, those are all looking positive too. Here you have that's an Ichimoku indicator, and you have support at 8.7K. You are positive on that indicator. It's Ichimoku, and it's positive because we are above the cloud, and you have the zero above it. If you have the red U under it, it is negative, and when you have the zero about or the O about it, it's positive. So it's positive looking for now. This one is positive too. It's an Ichimoku. Here you have one more Ichimoku, which shows you the distance you have from to the cloud. And this is a math indicator, and it is looking fine to me. This is NBT. I think that I should get rid of it because I don't think it works anymore. You should be where the green arrow is, and we are much higher. and it does not look as if we go low enough, if we will go low enough to touch it. So I think that NBT is because of how, because people are using too much exchanges and don't lose wallets and don't take custody of their coin. I think that NBT is not giving you proper signal anymore. So we should probably get rid of it. The first indicator is positive since we are above the line. Here we have Big Max founding and we are negative, so more people are thinking that we go lower. This favors the bulls. That's one more indicator. It gave you the top here, but it's not looking, I mean, I think it played out. Actually, I'm not expecting us to go much lower than that. So we had the top and we had the correction that followed. So I'm not expecting us to go lower. But here it gave you the top and we then went lower. So I think that the correction should be over soon. But we talk about that very soon when I look at the when I look at Elliott wave. When we will look at Elliott wave, here you have support at 9K, and that's that point where draw a line. If you look last bull market, every time you had one of those points, as soon as the bull market started, and let's say it started here, so you did not go lower than that. Then you had a support level here, you did not go lower than that. You make higher lows. Then you had a support level here, you did not go lower than it. Here you have one more support level, you do not go lower. One more support level, you do not go lower. One more support level, you do not go lower. One more support, and you never went lower until the bear market started. Then you had lower lows. But until that started, here, for example, you have a lower low. Since this is the support level, and you went lower. Here also, you have that support level, and you went lower. So, but that's because it's a bear market. When the bull market starts again, I don't expect us to go lower. I think that the lows I hope that the lows will hold. As long as they do, it's great. We are still positive, I think, at least. It looks like if we are on that stop and reverse. Here is an indicator called, that's a chandelier, I think, indicator. And it gives you a level where you should put your stop loss. So that indicator says that your stop loss should be at 9.9K, a little above. That's what the indicator suggests. And it tells me that we are in a bull market as long as we stay green. Here we're in a bear market because it is red. But as long as it's green, we are in a bull market. As you can see, as long as it stays green, it is a bull market. And that was the end of last bear market. So it worked great last time, and I hope that it should do the same job this time. So as long we are above it, and as long it's green, you should expect the bull market to keep on moving. You have support at 9.4K here. And if we go that low, it's a buy the deep scenario. Here we still have the gap on the CME. I can't tell you if it will be filled. Normally it should, but we had several occasions to fill it. Here we could go lower, here we could go lower, here we could go lower, and we never went lower, so I'm not sure that we will fill the gap. Maybe it stays open. In a bull market, it can stay open. So now we take a look at Elliott wave, and that's important. So here you see several Elliott wave levels. And as you can see, that was the first bull market. we went up. You had 1, 2, 3, 4, 5. That was the first bull market. Then I had first bear market. Here you have the second bull market until 5. Then you go down, you have the second bear market. And now we started a bull market. In my opinion, we should have ended the corrective wave. Why do I say we should have? Because I'm not sure at 100%, but it looks like. Why am I not sure? Because we are still having a complex correction. And as long as you have a complex correction, I can give you an indication of, I can tell you with certainty that that the correction is over, because it could not be over. But I think that the complex correction should reach its end, and then we should go higher. Phase 3 should start, followed by phase 4 and then phase 5. As you can see with the cycle, they are right translated, which is positive. The first cycle, the second cycle is also right translated. By that I mean that the top happened on the right side of the cycle, but I do not expect this cycle to be right translated. So I expect this cycle to be shorter, and because I expect the next bear market to be stronger. Why do I expect this? Because you had 1, 2, 3, 4, 5. So after having a 5, you get severe bear market. So I expect the next bear market to be severe. Here, for now, the time that I have is the first, is December 20 next year. So I expect this bear market to be short, but I expect also to go high. And then I expect us to be falling for a long time until the cycle is over and we go higher. So here I put the low at, right now it's at 70K, but it can be lower than that. And I put the top at very high, at 600K. So I'm not sure that we go that high, but I did put it right. At least I'm expecting, I'm not sure if they will be that, if we go that high, but I'm expecting to have a phase 3, which get us higher, then a phase 4 lower, and the phase 5 higher again. So I expect us to play out. You have the Bitcoin halving. You have the Bitcoin halving. The next one is May 20, so next year. And I expect us then to be around to end phase 4 and start rising from there on. Anyways, the question right now important is to know if we had or not if the corrective phase is over. As I told you, it's a complex correction. So I can tell you it would be a simple correction if it stopped here at phase 4. I mean, you have A, B, and C. If it did stop here at phase C, it would be a simple correction. But since the corrective phase is still on, why do I know that it's on? Because we haven't started 1, 2, 3, 4, 5. Okay, there are rules in 88 Wave. I'm not going to go over them right now, but there are rules, and those rules are not validated right now. So since they are not validated right now, I still think that we are in a corrective phase. Even if I put a 1 and a 2 here, I still think that there's a chance that we are in a corrective phase. So how long do I expect the corrective phase, that cycle, which I did point out here, to last? Right now we are here from date, and next week we will be here. So I'm expecting it to stop next week. So it can be a little longer than I will extend the cycle. But for now, I still think that it's corrective. I don't see the impulse wave which I'm looking for. But I expect the impulse wave to start maybe this week, maybe next week, maybe the week afterwards. So I'm expecting it to start soon, because this should still be a bullish cycle, which means that you spend the majority of the time rising and the minority of the time declining. So since we already spent a long time declining, correcting that impulsive phase, we should reach an end now of the correction. So that's important. And as long as the correction is not over, there's nothing I can do. I have to see the start of an impulsive wave according to 8 wave theory. And only then will I be sure that the corrective wave is over. Because this correction is a complex correction and nobody knows where it ends. My guess is that it will end this week or next week, but it could be the week afterwards. Here we have Bitcoin compared to Litecoin, and Litecoin is holding, but on its lows. So Litecoin is not doing that well, and it could break down if I look at it like this. I'm not going to go deeper into Litecoin. I just want to see what Litecoin does compared to Bitcoin, and right now it is at its lows, while Bitcoin is closer to its top. Here we have one indicator which closed the short position, which is stop, which is bullish, positive. Here you have, according to me, a buy the deep scenario in a bull market, just as that week was also a buy the deep scenario. If I look, for example, here, when you get that indication, that's actually an indication to go short, but in a bull market, for me, it is close to a buy the deep scenario. Here it was perfect. Here it was 1 week before the buy the deep scenario. Here it was quite perfect. Anyways, to me, this is an indication to go long in a bull market. Here we have several indicators, but when I say go long, I'm talking from an investor point of view. I'm not talking from a day trader point of view. So I'm not talking about what Tone Base does, which according to me is more gambling than trading. I'm not talking about taking a position now and 2 hours afterwards executing that position. I'm talking about several months, maybe years to hold a position. And to me, that looks bullish. And as long as my thesis is not refuted, as long as I don't get the indication that I'm wrong, as long as the market does not prove me wrong, I will keep thinking that. So when will I think that we are wrong? If instead of having an impulsive phase, as I expect, we keep correcting and correcting and correcting, and the correction is too long and goes too low, I will at one moment have, according to elite wave theory, I will have the indication that my thesis is wrong and that the impulsive wave is not coming, that phase 3 is not starting. But as long as I don't see that happening, I will keep my analysis as it is. And for now, it is as I gave it to you. Here you touched that line this week, but now we went up again, so it is looking better. When you touch that line, it's a buy the deep scenario, and it was a buy the deep scenario yesterday, I think. That indicator is negative. This one is still positive. At that level, I think also that it's a buy the deep scenario, but I have to check. And here you had a divergence, but you're still positive. And I think that the diversion played out. You had an entry level on that indicator, a risk and the entry level on that indicators. Here you went flat for a long time, and the distance between those two moving averages shrinked, which is also an indication to go long. And that line is flat for now. So anyways, the most important indicator is the indication to go long with a low risk, 10% risk. So that's positive according to me. Here you have an indicator, the lower indicator is negative, but in a bull market when it's negative, it's a buy the dip scenario. Here you have support at 8.1K. And as long as we are looking like this, to me, it is positive. I'm not too sure about what that bar tells me, but I think I would say it's positive. I mean, it was positive here, and I think it could be positive here too, or maybe not. But I'm not too sure. It is on. I'm not sure what it represents. Anyways, when you touch the red moving average, it is a buy the dip scenario. Right now, we did not touch it, and we are far above it, which is not great, but that's how it is. That's why I think that is buy the dip scenario if you go to 8K, but I'm not sure that we will. I would not be betting on it. This indicator looks quite all right because we are still high, and I'm expecting us to rise and to keep rising and to stay above it. As long as you stay above it, it's bullish. When you get below it, as you did get here, it's the bottom. And then you go above it, and you normally stay most of the time. Here there was a little exception, but during the rest of the time, here you dived into it, but the next week was higher than it. So normally you don't stay below it. The same happens here. You were below it, which was the bottom and the floor, and here you are above it, which according to me is bullish. And I'm expecting us to stay above it. So I'm expecting us to rise. You have some trend lines, which are resistance, but I hope that it's just a question of time until when we get above them. Once you are above that trend line, it looks great. We should go to all-time highs. Here also you have a trend line, and once you are above that trend line, we should go to all-time highs. Here we have support at that level, which is 8.8K. So as you see, around 9K, 8K, there's a lot of support. That's a trend line, and it is support right now. Here you have an indicator. When you're below it, it's the bottom, and when you're above it, it's a bull market. So for now, well, I'm simplifying, but anyways, that was the bottom, and here it looks much better once we are above it. So it tells you that the bull market has started, but it's a lagging indicator. Here you have support at 8.9K, nearly 9K. We are positive on that indicator. It simply tells me that when we are below the second moving average, it is the time to buy the dip. And when you are above it, you are in a bull market, as you can see. Last time it was the same. Below it, it was time to buy the dip, and above it is a bull market. Here you have support at 8.8K, and it's looking good right now. We have Fibonacci sequence. I did think that we could go to 0.5 Fibonacci, 50% correction, but we did not get that much. And but we touched the 6.18 Fibonacci level, and it looks like if it's holding, and like if we will start a next bull trend from here. We have now the the 7.5 Fibonacci, which is resistance and holding the price down. But once we get above it, then we're quite looking good. Anyways, even if you break down, even the 6.18 doesn't hold, the 0.5 should hold the price. That's why I did put support level at 8.4K. Here again, you see the same thing, just the Fibonacci sequence is put differently on the charts, but here it even looks better. The 618 hold the price, and it does look as if we won't break below it. You have a buy the dip scenario on that indicator. Here also the same thing, buy the dip scenario for now. So it's always the same, because all these indicators confirm what I already told you. Here you had 2 weeks of buy the dip scenario every time you touch the middle. I don't expect us to spend much time below that level, which is at 9.9K. If you look the last bull market, every time we went below it, we quickly went above it, as you can see. Here we spent some time below it, but it was an exception. Here we also spent some time below it, but it was expensive. And that middle, which looks like a middle bullish band, is rising. And here also, I mean, yes, we went below it, but then we quickly went above it again, and the bull market continued. So I'm expecting us that if we go below it, that we won't stay long below it. And for now, it looks great. I mean, it's still rising, and we are above it. So it tells you that we are in a bull market. The same thing here. So support is at 9K, and we should stay below, higher than it. We can pierce it, but it would be a bullish piercing, according to me. That gave you the bottom around here, where I put the arrow, and now it is rising, which is giving you the indication that we are in a bull market. I'm not expecting us to go below it, because you did not go much below it during the last bear market. At least I'm expecting to keep rising, and that we spend the majority of the time higher than that moving average. As long as that's the case, according to me, and according to that indicator, we are in bull markets. The same thing here, it's a similar indicator, and he gave you the bottom here. Told you that the bear market is ending here, so it's a little lagging, but it's pointing up right now, and we are above it, which is for me the definition of a bull market according to that indicator. Here you had actually that's a warning indication, but when you get that warning indication in a bull market, it is for me a buy the dip scenario. So you had 3 weeks where that indicator tells you that you should buy the dip. Also, in a bull market, you spend the majority of the time higher than those moving average or whatever they are. They are probably moving averages. Here you went red. When you're in a red, when you're below it and they turn red, it is a bear market. When you're above it and they are green, it's a bull market. Here you had 3 weeks following one another. Most of the time, there are only 2. Often there are only 1. Every time you get that indication, you should go long. So to me, this is a buy in the deep scenario. I got that indicator. So all the indicators tell me the same thing, because it's the same asset we are looking at. I'm talking, as I told you, from an investor point of view. I'm not talking about from a day trader point of view. I just look at the probabilities and tell you if I think that it's more that the probabilities are in your favor long term, to go long right now, or that the properties are in your disfavor to go long. And according to me, according to Elliott wave, it is in your favor to go long right now, since phase two of the corrective phase two should be over or close to over. I mean, still a complex correction, and phase two might not be over, but it should be over soon. So according to me, it's a good time to go long. That indicator is positive. Here you're sitting on that moving average, which is by the deep scenario. Here you have support at 9.3K, and that indicator, when it touches the yellow line, is by the deep scenario in a bull market, and I think we are in a bull market. That indicator is positive. I should give you the name, but I haven't looked at the names of those indicators for quite some time, and I don't want to say anything that is wrong. And I don't want to look it up so we don't lose too much time, because I want this video to stay soon. What is important is that you read correctly the indicator. The name of the indicator is not that important. It is important if you're looking it up, but it's not so important if you. I mean, what really counts is if it's positive or negative. This indicator is looking quite well. So I'm expecting us to go above and then keep rising. Here you have support at 9.2K. Here it tells you that it's by the deep scenario. It was by the deep scenario a couple of weeks ago, and it is by the deep scenario this week. On both of those indicators, I mean the last one and the middle one. In this one, I'm not too sure what it is here. It might be useless. Might be useless. I liked that it gave you that decreasing band from the last bull market, but maybe it's just BS. So I'm not sure about the first indicator. The other two, I quite like them, and they are telling you that we are in a buy the dip scenario. Here we are positive on that indicator. Crypto fear and greed index is on fear. It was an extreme fear yesterday, and now it's on fear. Search results on Google Trends for Bitcoin are quite low. So I hope that they will pick up and that interest in Bitcoin will rise again. And I mean, it's no secret. If we go higher and we start phase 3 of Elliott wave, that indicator will be rising. And which means that more people will go into Bitcoin. And normally phase 3 is the moment when people realize that we are in a bull market, because we start approaching all-time highs and even go beyond all-time highs. So I think on my chart, on my Elliott wave chart, it told you that phase 3 goes higher than all-time highs, and I expect that to happen. So as soon as that happens, the search results will be rising. Here we have one more Fibonacci sequence, and that level hold. And right now we went above that level. Next level is this one. I'm expecting us to go above it and then keep rising. Here we have some trend lines and the current correction. I mean, if we break down, it could get ugly, but I told you there's support, so I don't expect us to hit the target of that triangle, the yellow triangle, because it would be very nasty if we did. So I'm expecting us, I think the probability is higher that we break up above it and then reach the target after reaching up. And the target should be around 15, 16K. So I'm hoping and I'm expecting that to happen, because if the other option realizes, if we go lower, then if we break out of that triangle and go lower, then we should, then it could look ugly according to that. Here we have the S&P, and the S&P is not looking good. So it was looking quite good this morning, but it's not looking good anymore, if I remember right. Let's take a look at the daily to confirm. Yes, that was a very nasty day, and that is not looking fine at all. So there are a lot of fears about recession. Every analyst I look at on the traditional market is talking about recession, at least the one that I hear of, and that's not great. It's not great because I'm not sure that people have realized that Bitcoin is a safe haven. And as long as they don't realize that, if we go very low on the S&P, if a recession starts and we go very long on the S&P, people lose money, people lose their job, and they will start selling their Bitcoins. And that's not great, but there's nothing I can do about that. I mean, it would not be in accordance to Elliott wave, because that should happen according to Elliott wave, but only in 1 year. So we should have 1 more year of bull market according to Elliott wave, and hope that happens. That will coincide with the next recession. So I hope that the next recession only starts in 12 months and not right now, because if it starts right now, it's not looking good. Anyways, you have support with those moving average, and you must hope that they hold. The green one is great if it holds, if it gets to 50. And if not, you have also support at 200. I think the last one is 200. So you must hope that they hold. Bitcoin is not directly correlated to the S&P, but if a recession starts and things are looking too ugly, there's a moment where people, from a psychological point of view, will have to sell their Bitcoin. And that isn't good for Bitcoin. So to me, we have to hope that the recession does not start right now, because if it would, I'm not sure that Elliott wave will play out as it should, because I don't have enough experience to tell you. And Bitcoin is a too young asset. I mean, the last 2008, it didn't exist, the last financial crisis. But it doesn't look good. It doesn't look good. There are a lot of problems all over the world. The trade wars, the Japanese financial banking system, the European banking system. There are a lot of problems everywhere. And the resurgence and the inverted yield curve and the recession could be in the cards. I just don't know when it starts. I don't know if it starts right now. I don't know if it starts in 12 months. According to Elliott wave, it should start in 12 months on Bitcoin, according to Elliott wave. And that would be perfect, and everything would line up. If something else happens, it could be bad news. As soon as people realize that Bitcoin is a safe haven, but I'm not sure that that's the case right now, and that when the financial market and everything goes down, Bitcoin can be a safe haven and protect you against the risk you have not on the S&P. When people realize that, it's great, but when they are totally uncorrelated, it's great. But for now, even they are uncorrelated in theory, in practice, if the recession is too hard, they will end up being correlated. At least that's what I think. But Elliott wave says that we have a bull market ahead of us. Here you have one more Elliott wave on the 12-hour chart, and I hope that is a wave C, but I can't tell you because it is because it's a too small time frame, and I'm not sure about it. and it's too complex. When it gets too complex, you lose tracks. You lose track. How do I know that we didn't start an impulsive wave? Because for now, we don't have a clear 1, 2, 3, 4, 5. Here you maybe can find one, but then you should have an ABC correction, and it doesn't look like it. I mean, to me, this still is more corrective than impulsive. Here again, this does not look like an 1, 2, 3, 4, 5 impulsive wave to me. So as long as it doesn't look like an impulsive wave, I have to think that the corrective wave is still playing out. When did I lose track here on that C? After that C, I'm not sure. I'm quite sure that that is an A, B, C. Here again, you have an A, B, C. Then you have a C correction, which is made of 1, 2, 3, 4, 5, just according to textbooks. But then it starts getting complex, and I lose track. So this labeling is I'm not sure about that labeling. Those ABCs, I'm not sure about it. I put them on the price, but I'm not sure about it. What you have to look at is that we are making higher lows, which is great. And we should expect that to keep happening. We should hope for it to keep happening. And at some time, at some moment, I don't know if it's today, if it's tomorrow, if it's this week, if it's next week, but at some moment, the impulsive waves should pick up again, and we should start wave 3 according to Elliott wave theory. Okay, let's see if I can reload the page. We're done. That's all I wanted to tell you. So here, now it seems like if it's working. If you go on my services, you will have one-on-one coaching and the description of what to do. Here you have the other services that are available to you if you're interested. Anyways, thanks for watching, and see you soon. Bye.